How can you see what's... Good morning, traders, and welcome to the Bookmap live trading webinar today with Scott Pulcini, a futures trader. Scott will be trading live. We do this every Thursday at 10 a.m. This is part of the Bookmap education. It's all free. So what you get is part of the Bookmap education, the educational course online, and then forward-looking analysis to put that to the test every day. And then we have live trading 2 days a week with Jay Trader, Stocks Trader, and Scott. So that completes your education and or at least access to creating a very, very quality education. All right, so Scott, you guys know who he is. I have his contact information. He does offer mentoring services and education. So he's got a trading room, a course. You've got his email here, his website, etc. I'll put this into the chat for you. Got to go through the disclosures, and then we'll turn it over to Scott. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay. So let's see, Scott, are you in here? Yes, I see him in there. So if you want to, yep, there you are. If you want to present your screen, and then I'll rebroadcast that. There it is. Okay.
Screen?
Yep, we're all set.
Okay. All right. So currently long here. This is right about where I entered. There was a there was a setup here right at the open. Decent buy ice right here, and we got a full ATR. We retested once it got outside the ATR average true range. I use a 5-minute average true range to help me see the current volatility. So I have a system based on setups and the current volatility to help me enter and show where I should put my stops based on the volume event, etc. So I got in here. I got out of one here. We'll go over that, but I still have two on, and it's just basically algoing around right now. So I had an offer up here. I'm just going to delete this for now because, you know, if you're sitting in front of your screen, if you're not in front of your screen, then, you know, you can put in these in important areas. We'll go over what this area is. But if I'm sitting here and I'm watching this, I know this is an important area. Again, we'll go over it. But if I see this come up here and I just see nothing but blue bubbles, meaning market buying, there's no selling, well, I don't want to sell if there's no other sellers, right? So I'll let this see how this reacts up here. And if it blows through, I'll just hold on to that position. So so that's about all I've done so far. So over what I got out of one there. First, let's go to big picture. So there was a ton of volume yesterday, like thousands of buy ice in this area yesterday as we formed this balance area. Actually, it was right in here. So, and it basically just sat there all day long, and then of course gapped down. I never can catch these moves overnight. I mean, during the day they always seem like they sneak up on you overnight, but first move back up into this area is going to be a very good shorting opportunity because there's most of this volume in here was buy ice. We were talking about it in my trade room yesterday.
576 contracts.
That's bonds. We'll look at that possibly. So anyway, I'm watching to see. This was an important zone that we're in right now, and this is why I took the long here. I gave this a shot here. but I definitely want to see if this market moves back into this area for a short. But right now I'm long. This was an important area where I usually try to draw these important zones where the initiation of importantness starts. So I've got 4 main areas of charting. We have directional conviction, that's a gap. Gaps are directional conviction. Another directional conviction, buying and selling tails, tops and bottoms of balance areas, and high volume nodes of balance areas. So that's what I look at. I draw my zones mainly for directional conviction and tops and bottoms of balance areas. I don't usually draw them for the high volume nodes just because I'll just have too many zones on my chart. But you can eyeball that, right? So for instance, we were talking about this yesterday where I had said, this market had broken out of this multi-day balance here, and came back and it held where it should have held for this to remain bullish potentially. But I said if it gets below this high volume node, then this thing's in trouble, and it did. And then it kind of tried to hold on, and you had all that bias come in and then gone. So this is a failed breakout of this structure. But I could just eyeball this that's the high volume node. I did have a zone there, but it was from other stuff. So the point is I don't draw zones for high volume nodes. I can just eyeball it. But this was an important zone here, and that's why on a retest of this zone right around 11,800, you should be looking for a very high percentage short. Anyway, this was a gap up this day, broke out of this balance, came back, held, buying tail. That's another factor, one of the 4 important areas of charting. And then it kind of just balanced over here. So, when a market moves up and through areas a bunch of times, you can usually delete the zone. Or market profile, whatever you're looking at, kind of invalidates the area. But then this market closed right here and gap down, so this zone is still relevant. So this zone over here was, again, directional conviction with the gap, directional conviction, and we got through it, and you can see buying tail, and then we gapped kind of through it right now, and now it's kind of struggling to get through it. So I did go long here. One, there's Fed's guys talking, so I took that long, I'm rolling the dice, taking that long with Fed speak, because anything they say is like a new information hitting the market. So so I was willing to take this trade, even with them talking. But I had some other things. So when you're trading, you're looking for Confluence. Hold on 1 second, guys. All right, couldn't clear my throat there. So the more things you can have in an area to support your trade, the better the trade is, right? So you guys all know I use the magical Ludwig levels. This was a blue lug. Blue and red lugs are our main lugs. So the major support lug. We had standard deviation of VWAP. It wasn't extreme, but it was 1 standard deviation. So you got those 2 things, and then you come over here and you had the bottom of 1 market profile composite, and then the top of another one. So all these things combined told me this is a good opportunity for short. You can see this bounced exactly off of the top of this one, the bottom of this one, blue lug, volume event, long. So, I tell my room all the time, if you can just be patient for these important areas, we talk about it. This is one of the, talk about this as well in the room all the time, the trading in the zone document. So my important areas are, and I pay myself as well when we hit these areas. Lug levels, I call them lugs, so I don't have to say lug with level 85 times a day. Market profile, composite highs and lows, which I just showed you, points of controls. That's just the most traded price in the market profile. So if this market, you'll be amazed at how many times that like right here, all the markets respect that. This is the most traded price in this area. That's the point of control. You can see it try to pop up, failed there, came up here, struggled here for a while, and then finally got above. But that's one of the important areas that I look at. And then the other areas are VWAP standard deviations. We just talked about that. And important predefined zones based on the candle structure or opposing SI setup. So we just went over all of those in the short time that I've already been on here. We got the zone from the stuff that's happened prior. We got the current stuff with the market profile moving into these areas. And then we had the very current stuff. So the Ludwig levels are more for the day trading type of trader. I mean, you could use them longer term too, but they change throughout the day a lot of times when they bust through them. So I had that in my favor, and then this is a standard deviation of VWAP, so there was a lot in their favor. So I still wouldn't have taken it long until I get the king. The king is the volume setup, right? So when I got the volume setup, then I said, okay, it's go time. So I was eyeballing that area. So you should always be watching these areas and coming up with if-then scenarios. So I knew this area was important, and I was just waiting for a bounce in the volume setup. The volume setup came right now, right. It wasn't right on the lug, but after it got above there, it came in, and I knew I had all those factors in my favor, so I'm long. So again, I'm rolling the dice with the Fed talking here. So let's see if this can hold. If not, then I had to get out of one. I'll take a small loss and then on to the next trade, on to the next important area. So what I was saying, if you can just wait for these important areas, you put the percentages so much higher in your favor for a winning trade than just trading randomly in the middle of areas just to trade, just because you think the market's going to go up or you think it's going down, and just throwing in trades in the middle of Algoville, as I call it. If you wait for these areas, you're going to be getting other traders that see the same thing, and the bigger money that sees the same thing, so on and so forth. And again, I know all that, and then I wait for the volume setup to come in to take the trade. And then I have exact parameters that I use on the volume setup, right? So there's one of two ways of taking these trades. You can either, if it's a very important area, and I definitely could have taken this aggressively, meaning as soon as this gets outside of an ATR. So I use ATR because these algos are using ATR, right? That's why it's so important, because when these markets get an ATR from, these algos read what we're reading, right? It's like the big money's had this information for 3.5 years, right? Bookmap's had it for pretty close to the same thing. And, their developers came up with a way to read this information based on the CMMBO data that's highly enhanced data to tell you with 100% certainty where the icebergs are, where the stop runs are. Well, the bigger money has the same exact information, and the algos can pick the stuff up too. So it's uncanny when these markets pull away within about an ATR or two ATRs from the volume event, it will snap back. So that's why I demand that the market gets outside of an ATR for me to take that long, right? If not, I'm just opening myself up for snapbacks, right? So it's, obviously it's not 100%, but it's just a higher, nothing's 100% in trading. It's just a higher percentage that the long is going to work if this market's able to push away from the algos that like to snap it back to the volume events, right? So anyway, there's two ways of getting in this trade. You can get in aggressively. The minute it gets outside, I use 110% of an ATR. You can get in right then, and then you place your stop 110% an ATR below this, below the volume event, the bottom of the zone. Or you can wait for ATR, wait for the market to touch the ATR, wait for the algos to snap it back, wait for it to move outside an ATR again, and then get long. And that's what I did here. So I could, like I said, I could have gone long here aggressively, but I was a little more prudent. Mainly because we actually were through that zone. I know there was a lot of confluence down here like we just talked about, but we were technically through this zone. So I was still go long, but I wasn't like giddy up, like here's the setup right in the middle, I want to go long, right? So still took it. As much as I want these markets to go to zero, and I'm long. So now what I'm watching, so I did get out of one earlier at the baby lug. So these are good areas. You can see it touched it exactly, pulls back 50 points. I don't usually get out of areas or get out of just at baby lugs if they're not confluent with something, but this was close enough to VWAP where I said, you know what, I'll just peel out of one because I had a feeling this was going to happen, and the Fed was talking too. So I'm like, I don't feel like him having these clowns say something and have this market pull back 100 points on something that comes out of their mouth. So got out of one. Now I'm watching this area closely, or I'll get out of another one. So I'll be out of 2 or 3. Let's move this over here. So what's coming up here is, again, baby lug. Now VWAP is getting closer here, so now you got confluence there. And then you also have the top of this market profile where it just bounced off the bottom of it that we just talked about. So that is enough for me to peel out of another one here. If it can't, if it busts right through here, then I'm going to hold it. And then I'm going to try, if I do get out of there, then I'll try to hold this thing. My goal or my objective is to get to the to the other lug, the other major lug, and you see how far away that is. And I guarantee you this lug is right in that zone that we just talked about. So I will hold this trade. I'll get out. I'll watch right here. If they can't get through here, get through this area right away, I'll get out of another one. But I will keep one on, and I'm going to hold it to see if we can get all the way up to the red lug and or an opposing volume setup. So say this thing's motoring up, and then we get a stop run in one of my 6 distinct setups up here, in an important area as well, and it fails. Well, then I'll be out of the trade. So sorry guys, I'm having a tough time clearing my throat today.
151 contracts.
Hold on in here. That was okay. So this is a perfect scenario. Here's another setup. So now I can either, I can definitely, I'm going to definitely trail my stop based on this new setup, right? So you see this sell ice coming in here, it's threshold. So I have exact thresholds for each market that I demand to see before I put trades on, right? That I know from watching thousands of these setups for each market, what is trade worthy in the market and what is not. So when you get this SI indicator, you don't want to be trading every spike in the SI, like 106, 95, 91, whatever that was, like 98. I know the exact amount, or pretty close, that I want to be participating. And this is close. I mean, this was 154, that is threshold. So I'm going to draw this zone, and then I'm going to trail my stop based on this new volume setup, and I can potentially add to this trade as well. And you can see this ice is coming in right in the area that we talked about. So it's not surprising because a lot of traders see the exact same thing as far as market profile and VWAP and everything else. I also got my buddy Tick Strike here. It's really fun to have when the position's going in your favor, but when it's not so fun. It's not so fun listening to a torture treatment, as I call it waterboarding. All right, so the new thing I'm doing as well, if you guys have been on my webinars before, I was just drawing. I didn't have this price line up. I know I've been showing this a lot lately. It's important. So I didn't have this that showing because when I first got Bookmap, it was annoying to me. Like it was just too much for my brain. I don't like a lot on my charts, right? There's enough on this chart that messes with my head. So I was drawing these zones based on the bubbles, right? And that was not correct. It's actually the middle of the bubble is where the traded price occurred. So that was a mistake that I was making for a couple years. I wonder how much money that cost me. I don't even want to think about it. But what I do now is, you right click on your bubbles and you bring up last price, and then you can see that white line. So I actually take the bubbles away when I draw my zones just to help me find the exact price so these zones are accurate. So see, this thing's going crazy. So to draw these zones, all you need to do is get your crosshair here, and you want to incorporate all the prices that occurred in this volume spike, right? So you can see here, if I start it right here, just go down to where it started. Okay, here are the prices that were in here, and actually the market went all the way down to here, and then all the way up to here. So I'm just going to put these in right now. Should I have hotkeys set up? You can set up your hotkeys here. I'll show that here as well if you guys want to do that. This was sell ice, so I like to color code them just so I know what I'm dealing with. So I use black for sell ice. That's that, and let's make sure that's accurate. So you get out of edit mode and then you make sure, so you see that's not accurate, right? So it was originally, but this market went all the way down to here. It's still on the spike. So all I do is hit my Shift E, that's my hotkey, and pull this little dot down, and now I have all the prices. So now that's an accurate zone. So that incorporates, you can see, watch the prices up in the crosshair here, all the prices that happen in this spike. And that's how I draw the zone. All right, so this is the area. I got to make a decision here. Do I just want to trail it to that volume, or do I want to get out of one right here? You can see this is the exact area that I was talking about, right? So this is trying to get out of here right now. Oops. It's got above VWAP. It's got above algo guy. I mean, not algo guy. Baby lug. So I'm going to eyeball this for a second and see if I want to possibly get out of this trade, because I could get back in this trade based on this new setup too. So I may just peel out of this thing, out of one of these. So I'm going to get out of one now, but then I'll show you what I'm going to do here. So first and foremost, I want to know my new stop price is where I can trail my stop. So my stop was way down here, 110% of a 5-minute ATR below this volume event. Well, here's the new volume event. So I'm going to make this 1 because I only have 1 on now. And I'm going to bring this up here. I don't know the exact price yet. But we're figuring that out right now. So I used to do this by hand where I would go, okay, the zone's at, the bottom of the zone's at 11,630. And then I come over here and say, okay, ATR is 26. Okay, I want to be just outside of 26, so I'll say 30 points. So I would I just by hand or just by eyeballing it, I put my stop there. Well, now we have in my room, they've the guy traders in there have helped build this. It's incredible. So now I can actually put my zones in here and know the exact price for 110% of an ATR based on the current ATR, right? So we know that zone tops at 30, looks like 37.50. I'm sorry, 37.25. And then the bottom of the zone is at, I don't know why it should be right on one of these prices. So that's how I know I made a mistake here. Hold on. So you see how I didn't, no, that's not right. Yeah, I needed to bring it down a little bit. So you got to expand sometimes. You see I have this a little higher, so it was actually, this was still in that spike. So I got to bring this down a little bit. You want accurate zone, that makes a difference. Trust me, you get stopped out to the tick all the time. So 11,630 is the bottom of it. That's 30. 37 quarter. So 11,6, 37 quarter. All right, and then I put in my current ATR. So again, this is just default Wilder's 14 ATR, 5-minute ATR on Thinkorswim. You can bring it up on other platforms. You can see right in the middle of the chart there, 26 point. You can see at the bottom and in the middle, 26.48. I'm sorry, 26.14. All right, so I put that in. This is going to tell me my exact stop price. So this is a trade we're doing in my room. It's like a short-term scalp trade type of thing. We're trying to catch the algo nonsense, which it's a great trade. You got to be on top of it, but it's a great trade. So here I know. So say I were to get long right here, which I'm already long, but if I add to this, I could add at 66. Well, my stop is 0125. So you saw before I just eyeballed it and I said even. It's actually 0125. So now I know the exact price instead of just guessing based on what that spreadsheet. So that's been very helpful for the position trading. And then you can see on here you can put your account size. We talk about this every week, and you only want to be risking 1.5 to 2% of your account size, and it doesn't matter what you're risking in points based on your account size and 2% risk. It tells you how many contracts you can have on, right? So I get all the time, well, I like to risk 20 points when I trade, when I put on a NASDAQ trade. Again, you guys hear me rant every single week. The market does not care what you want to risk. It cares about volume events and the volatility, the average true range. So use your stops based on that, not were you a static number that you don't want to lose. If you really think about it, it doesn't make any sense. And what do you think these algos are built off of? You don't think they know when the market starts rolling away, they'll let the big money do their business, and then they know all the terrible traders trail their stops because they got to pay their rent and pay their car payment, and they don't want to give back a lot of money, and it comes back, they snap it back on you, stop you out, and then it goes. What do you think that is? I mean, guys, you got to be realistic in what's going on in here. I mean, you're going against the brightest minds on the planet that are trying to take your money. These algos wouldn't be running if they weren't taking your money, And I'm a firm believer that's why the CME brought back or gave access to this MBO data to give a little more transparency to what's going on, because there was a point there that I don't know the exact percentages, but I read a lot of articles about it at the time that the majority of the trade was just big firms, big funds. It was like shark eat shark. There weren't any fish in the water for these big funds to eat. So it was like kind of an enticement by the CME. This is just my opinion. I don't know if this is exactly why, but I would assume, right? Because they want volume coming through their markets, first of all, and they're not getting full volume if there's no retail traders in here. And if there's no retail traders in here, how are the big firms going to make money? They're going against each other, right? So this is, in my opinion, this is just transparency to help the retail trader compete. But my point is, these algos are still, they still know what the tendencies, the human tendencies of traders are to trail their stops, and they come out and they stop you out, they make it painful, and then it goes, right? So use this ATR to your advantage, whether you're trading my system or not. Figure out a way to use that ATR. And I know what people are saying, well, ATR can be from anywhere. If it's 24 points, was it 24 points from there? Is it 24 points from there? Well, that's why we're using the volume event to base the ATR, right? I'm just not randomly saying, okay, right here, let's trail an ATR. I'm going off of something. You can even use some static things, right? So say if you're using the lugs, you can say, okay, I'm going to give this a chance. Say we roll up here, or even VWAP. Let's see VWAP. A lot of traders use VWAP. So we get up here. You're like, okay, we're touching VWAP. I'm gonna make this. I'll get out if this comes back just outside an ATR from VWAP, right? That's where you want to be using the ATR. Important areas, important events. Important events are the volume events, or you can be using, VWAP. This is daily value area. This is one standard deviation from VWAP, 1.5, 2. You could be saying that. So if this market rips up, you're not using lugs. You just say, okay, here we are at 1.5 standard deviation. I'm going to give this a chance to roll all the way up. If not, if it comes back an ATR from that, I'm out. See what I'm saying? So it's not just randomly throwing an ATR in from anywhere. Use it from important areas. I'm telling you, it makes a difference. And I'm telling you that is what these algos are trading off of. A lot of them. All right, here's something we'll possibly go there. It's just stop runs and stop runs all day long there. I'm convinced it's the worst traders on the planet in the market. It's just stop run back and forth all day long. So before I get to any questions here, if you got questions, throw them in. Utilize this time. There's not a lot going on right now. So for me to add to this trade now, I want to see this isn't some incredible area where I just want to jump in aggressively long. I've already been long, but say for my new trade, this is a brand new trade. It has nothing to do with my original trade on why I would get long here. Add to this, it's kind of struggling right here, like we talked about. It is still right around VWAP. So I demand for this to go long here. I want to see ATR retest failure. So we already talked about this, but you can see it here in black and white. Just make sure this is still accurate. It's 26.09, so that's fine. So ATR out of that zone. And this is part of the other strategy, but you can see the exact price. So an ATR from that zone, from the top of that zone, is 63.39. So we'll say 63.5. Did this get to 63.5? Absolutely did, right? So, and you can see the first time it did, these algos, I think this is the exact price. They snap it back. It didn't quite get back here, but that's what I'm talking about. This is why you want to know what the ATR is. So anyway, this is my system. This is how I trade this. This is the conservative entry. Get this out of here. So I got the ATR. Now if this retests this zone and then comes back up, gets outside the ATR, we'll find the exact price here in a second. It's 110% of an ATR from the top of this zone. I will add to this position. It's a brand new trade. It has nothing to do with my original trade, but I will stop it in the same spot that I have this, because this is the volume of it and I'm trailing it based on current ATR. So if I were to get long there, I'll get long at 66. So that's just outside the ATR, right? I'm doing 110% of an ATR. So 10% more of an ATR will give me 66. That's not a good number to be trading. I'm just kidding. So I'll get long there, and then I'll add. I'll put on 2. I could put on 3 if I want. If I really love the trade right there, I'd put on 3. I'd round up, but it says 2.2, risking this amount of my account size. And then I'll stop out at that 125 that I already trailed my stop for my current long on, right? So now I just wait. Is there a chance that this doesn't retest this zone and rips? Absolutely. So that's why you have to decide, hey, do I want to be aggressive here so I don't hope for a retest and never get it, because that happens a lot. Not a lot. I'd say 20% of the time it doesn't retest. And again, these are just my figures from watching thousands of these. Or you demand a retest failure, and if you don't get it, you gotta be okay with it. Right. There was a crude trade last Friday. I think it was Friday. It was at the red lug, and I was waiting for a retest failure, and it just went like this, and then just went like this about 200 ticks, and I just sat here fuming that I didn't put the trade on. Right. So, but I made that decision. You got to live with it, is what I'm saying. So I'm making the decision right here and right now, because this area isn't some incredible area to go long. I'm going to wait for retest failure. Then I will add to this trade a brand new trade. Are these guys still talking? Now we got ECB talking as well. All right, Bruce, any questions on any of that? That was a good half-hour straight talk. I don't usually go that long. Proud.
No, I think we're pretty good.
No questions. Half-hour talking. Wow.
You're that good.
I am not good.
Yeah.
Not.
Yeah.
All right, let's see what's going on.
We're all caught up.
Okay. So bonds, there is a little action, so you can see here. This was this morning. This was like 1,200 sell ice. It's a lot. Threshold in the air is 500. Just 1242. And then you had another event here. There's another 1,200 here, right? So you can see how this market reacts to these areas. So it comes down here. This came in here. Let's see. I didn't take this trade. I didn't do anything on this one. Yeah, so it skirted away from this. Retested the zone. Move lower. More sell ice. What did it do? I mean, guys, it's not coincidence where these markets are coming back to, right? These are caught traders. That's what we're trading off of. We're trading off of loaded up traders that are in trouble, right? So the whole idea, the whole premise behind retest failure is just imagine you're the big trader in here and you have your 1,200 sell ice and they buy it. You can see this huge big buy bubble. That's what triggered the sell ice. Remember, icebergs are hidden orders in the order book. They're not showing. A percentage of them are showing, but when they buy that percentage, then there's another, so say it's 10%. Well, there's 120 in the order book. Say at the time there was 120. Someone jumps up and buys it, and there's another, 1,200 behind it. They're like, oh, really? And many times they'll just do that. In this case, whoever sold here was wrong immediately, right? And then you can see what happened. This one was 3 ATR. We actually have a 3-tier ATR trade as well. But came back here, touched the exact zone. So imagine you're please, and just think of trading in common sense. You will do so much better. Think about if you're that guy that sold that. And it rips in your face. You're like, oh crap, you're getting calls from your trading desk, your risk manager. What are you doing? You need to get out of this trade. You're holding your breath, like your puke point's right here, and you survived the puke. And you're just saying, please come. This was me. This is why I know this, because this is what I used to do. And I would pray to the Lord Almighty. It would come back to my area. And I'm like, please come back. I promise I won't be greedy. I'll just get out of the trade. It would come back and I would peel out. And then as I peeled out, meaning I have to buy them back, it starts the next wave up. That is ATR retest failure. So we're just playing off of where traders are getting loaded up. And it's not a coincidence. It touched this exact area and ripped. Right? So we traded back and through this prior zone, so I'm going to actually remove that. But it did play out with an ATR, with a few ATR away from there earlier too, and came back. Now I thought I heard something in here. Let's see what's going on. So this is kind of a convoluted area. That's not bad. So 500 is my threshold here, but you had 365. I wouldn't draw it there, but you can. See, this is the problem with the price line. You can't. Could I change the color of this, Bruce, of the iceberg on chart for that?
The iceberg on chart? Yeah, sure.
Because that's showing me. Because the white is confusing because it's showing me last traded price and the iceberg on chart. Yeah, here it is. All right, so I knew that. Why did I ask you that? I was using white and black just because there's so many colors. First of all, I'm colorblind, and there's so many colors on the chart. I'm trying to separate it, but now that I have the price line on there, I'm going to need to make this a different color. So we'll just use right now. Let's just use yellow for the buy. Okay, so see that difference there. That's why it was hard for me to tell which one was the price line, which one was the iceberg. So what this is showing you is this. This is hard for me to see too, but this yellow line here. This is one house. So one house came in and bought some, and then it triggered some more, and this is the same house, right?
Yeah, not only is it the same house, it's the same iceberg.
Right, that's what I'm saying. Right, it's one house with a continuous iceberg. So they start hitting it, and as it moves higher, you see these sell bubbles. Well, they're running into this iceberg that continued, right? So it continued all the way up to here. You can see the big bubble, and then that triggered the rest of it, and then it was done. Right. So
Yeah,
that helps you draw your.
fully executed for 1,482 contracts there. That's what
guys, the
that's
level
what
of
the
transparency.
E. Yeah, that's what the E and just so people know. The T means a transaction or trade. So
Right. So 268 transacted, 555 transacted, and then it finally executed for a total. This is the total of all of this, right? 1482. I mean, guys, this is the information. This is what drives markets. You're sitting here. I mean, how many traders on this planet are staring at this and just trying to come up with head and shoulders and this is a backward dog or whatever the hell they use for their technical analysis, right? It's like you have absolutely no idea with this type of charting. And remember, I don't even know the percentage. It's probably close to 99% of all traders. This is what they're using only, and a couple other static things like market profile and stuff, which obviously I use, but it's not giving you all the information. You have no idea what just happened in here, right? And when you can layer this information of real-time volume with the stuff right? I'm not saying technical analysis is bad. I use technical analysis. I use it. I don't use it where it gets the reverse head and shoulders. I'm using balance areas, and we just talked about this, the four important areas of charting. The point is, even if you are using it, if you can use this information, so say you had a bullish technical analysis setup, and then you say, oh, hey, this is a bullish setup. Oh, and guess what? Somebody just bought 1,000 buys here too. I love this area, right? And then what do we get? Over and over and over and over. Here's your retest. Very likely to do that. If it doesn't, that's information as well, right? I mean, these are decent moves in bonds too. I mean, this move again. Let's mark this on. So I will incorporate this. You just got to be careful. This is where you have to be careful, right? So you'll see this trigger, right? Trigger back here with the yellow. That was that. Well, I mean, this is enough. I can incorporate that when I draw my zone. But if you see like 100, 180. 120 and it's like this, well, that's not a market moving event. Yeah, that was part of that iceberg, but I'm trying to find a concentrated volume event to draw my zone. So meaning this could have started back here and it could have been, it's the same house. Well, that's just not enough to affect the market. I want to see concentrated volume. So I would incorporate all this, but if this started like 100 and it was like it was down here, I wouldn't incorporate that in my zone is all I'm saying. So just be careful of what you're if it's if it's all in the same area, then fine, right? And this pretty much is. So this is all basically in the same area. But I'm saying if you get like it starts down here and this market's drifting up and you get like 100, like I just said, 180, and these are just these random prices. Well, you don't need to make your zone that big to incorporate everything. I hope I'm making sense with that. Find the most concentrated area and then make your zone. And this is definitely the most concentrated area. So. The same thing, use your cursor, started right about there, with this spike here, came down there, you can see the yellow, that's the one house, and it pretty much ended right there, right? So that's your buy ice area. This looks like it's, that was close to 400, this is another 500, so that's 1,000. You had 1,500 buy ice here, right? That is important, that is the information that you need to know. And what do you know? It went probably 2 or 3 ATRs around here. So the strategy we're using here is 3 ATR for a reversion trade that we play. And here's your retest. So now if this goes retest failure, I'm going to take a long in here. I don't trade bonds very often, but I'll take this. This is good enough size, and I'm going to take this trade. Now we put our zone in. Again, you can eyeball this too, but I now have the spreadsheet. So 125.21 is the top, 125.15 is the bottom. I go over to my little handy dandy spreadsheet, go to bonds. 25.15. Your ATR. I have this set up. I'm not going to get into this. Just know this is the ATR. It's kind of a different formula because of the tick size, and it's like 31 ticks in a point. It's 0.165. So 0.165 is your ATR. So this one ATR would have been 125.09, or we can round up 125.10 to the upside. Oh, wait, is that right? No, that's the downside. Take that back. That would have been 125.16. No, that's not right either. Why is that not working? Here.
You may have to refresh the site to be able to see the video. Apologies for the issue.
Put this in right. I don't know why that's not. It should tell me my what an ATR was. If I want to go long, this is just outside the ATR. I could go long at 125.27. So I don't know why that's not showing correctly. 25.50. Yeah, that's not right. But anyway, to go long, meaning I wanted to see a full ATR. This was an ATR out of here. It was more than an ATR. Here's your retest. Here's your failure. I'll go long at 29. I know this was more than an ATR because 29 is 110% of a 5-minute ATR, and that's showing that's what my entry should be, right? So I know to go long here, I go long at 27. Yeah, 27. Right. So 125.27. My stop will go at 125.09. That's what that is. This is not right. And I can put on 6. Right? So we'll set that up. 25.07. Again, that's 110% of an ATR from the top of the zone. If I get filled, my stop goes at 09. You could do this by hand. It's an eyeball on it. Then I would just put my stop down here. And I like that stop too because I'm going to make this market. Again, I'm going to take the stop out. But if I get filled on this, I like that stop because it has to go back through this zone that we just drew and then through this prior zone for it to stop me out. That's a lot of volume, a lot of trap traders that it has to puncture through for me to be wrong. I love these types of trades, right? So that's if I get filled, that's my stop. So we'll work that for now. And guys, this is all I do all day long, right? I have the bandwidth to watch, 12 markets. Some you guys I know don't like watching. You guys like staring at the crappy ES all day, which I've never understand. But if you have this kind of strategy, it doesn't matter what market you're trading in. What matters is the volume. It's the same across the board. You just need to know your thresholds, right? And that's my course goes over the thresholds for each market, so on and so forth. But this could be NASDAQ, it could be gold, it could be bonds, it could be corn. It doesn't matter, right? It's volume, it's traders that are trapped. That's what we're looking for and we're taking advantage of, right? So working that. So speaking of ES, I wanted to cover this too. Spot Gamma released yesterday. So we'll get into this whole, nothing's going on, so we got time to talk about this stuff. I mean, there has not been a single setup. So Spot Gamma released this 0 date to expiration indicator. So what's been going on in the markets, and he's been talking about this every single day. If you guys get Spot Gamma, every day he comes out and he gives you his take on the market. This is incredible in itself because you guys have, this is all for you ES traders that love to stare at this one market, right? You want to know where these levels are because these options dealers that take the other side of options trades, they have to hedge themselves, right? They are not position players. They get loaded up with options. They have to hedge themselves, and the way they hedge themselves is by buying and selling futures. So based on his analysis, he can tell where the major levels are of options activity, where he knows a very, very good likelihood these markets are going to respond because these dealers have to hedge their positions. So you can see this is a perfect example. This came right in this area and failed. This comes down here, it's a very good likelihood it bounces, right? So you want to know, you can use these for your targets. I don't get into the whole, I'll read his stuff. Like for instance, this is a good thing today, right? When he's pretty vanilla when he talks. When he starts to give like calls, like I think we're positioning long, we're positioning short. You want to pay attention because I'd say he's right about 95% of the time, right? So he does not talk this way very often. That's what he says. For today, we do favor markets staging a rally back into the 4,000. Is that just because he looks at a chart and says, I think we're going there? No, he's basing it off of Yesterday, there was again very large volumes at the 4,000 strike. So he knows these are like magnets. We talk about the liquidity all the time being magnets. Well, he knows that there's the highest concentration is 4,000 in, it's the SPX. You make sure you're looking at the conversion here. And again, you can bring these in your cloud notes and bookmap. So 4,000 in the cash market, SPX. So the SPX is the cash market, right? That's what the options are traded. A lot of these options. That's what he's basing it off of. This like the biggest options market on the planet. 4,000 is equivalent to 4,010 in, actually, I think it's 11 points. 4,011. Yeah, there you go. 4,011 in futures. So he is favoring a move all the way back up to here today. Again, is it because he likes the long? No, he's basing it off of the options activity, and he knows these markets gravitate towards these high volume areas of the options, right? The same way we look at liquidity. Like I said, a lot of times liquidity is the options. Like I'm guarantee you this is some options activity. So that's how you want to use these as support and resistance. So if you were long, you want to be consistent with it. You don't want to be just one day getting out at them, another day you ignore them, right? You say, hey, I love zero gamma. If I'm long, this market rips up, I'm going to get out of some there, and then some at the major one, things like that, right? But you can use these as support and resistance because these are where dealers are going to be active. So anyway, back to this. So lately, what's been going on, and it's a great strategy once you really think about it. I'll break it down for you. It's not 100% what's going on, but I'd be willing to bet from what I've seen in my 20 plus years of trading and the manipulation that goes on in these markets, it's probably exactly what's happening. So lately, 50-60% of the options trade in these strikes, so say it's the 4,000 strike. Well, 60% of the volume in the options lately has been zero date till expiration options, meaning they expire today, right? So what do you think that is? It's it's retail traders. That's a good way for retail. It's like putting on a futures contract pretty much. I mean, you do get more leverage, obviously. But now think about this, right? So we just got done talking about these options dealers, how they're not in it for position trading. They're in it to take these small, the differences in the strikes, so on and so forth. So they're hedging themselves nonstop. So if an options dealer gets loaded up with the 4,000 calls and the market starts moving.
CL 436 contract.
So say someone comes in right now and buys 100,000, 4,000 calls, right? Well, the option, again, guys, I don't claim to be an options expert at all. That's why you want to go to his site, but I do it with common sense, and that's how I'm a successful trader, because I make things common sense, simple, stupid.
150 per contract.
All right, we got finally some Crude stuff. So quickly, if a big player comes in, a big fund comes in and buys 100,000 calls, well, who's on the other side? The dealer, right? So he's now short calls, so he has to buy futures to hedge himself. So imagine if you are a big player and you want this market to go up, you come in and you load up the dealer. So you buy 100,000 calls from him. He's short 100,000 calls. He has to buy futures to cover him, to hedge himself, right? He's not going to hold on to those. This is actually genius, right? Because, and I know what you could be saying, well, they could just buy futures, right? But if they jump up and buy all these futures, say they buy $100,000 worth of futures, they don't know what the other side is doing. They don't know. I mean, these guys could be long-term traders that are going to hold their short positions for weeks. They don't know, right? They do know if they load up an options dealer, they have to hedge immediately. So think about this. If you're a big player and you buy a ton of options from a dealer, you know they're going to start hedging immediately, especially as it goes against them. So you buy a bunch of options, and then what do? You start buying the futures. And the minute this thing starts rolling, these options dealers have to buy futures too, and then you get these cascading events. That's why trade has been so difficult lately for the last month or two, because the options, the zero date till expiration options activity has exploded. So we've been talking in my room for weeks, because I contacted Brent and we were going back and forth about it, and he said we have an indicator coming out. Anyway, they released that indicator yesterday. So that's what this is. So you can set these different, Russell, Qs, SPYs. So this is what's telling you. You can see which way the options, the short-term 0 to 8 options are going. So you can see this this thing starts to head down, what did the market do? It starts to head down. It's ingenious, right? So it's like they load up these options dealers that have to hedge, and they just get it. It's just like a cascading effect in their favor. The way I think is going to be a really important way to use this is when this thing starts moving. So say, for instance, they loaded up they sold a bunch of calls, or say they bought a bunch of puts. So now dealers are short puts, so they got to turn around and sell the futures, right? So yeah, that leads to this move down. But is that real selling? Is that like position trading selling where this market's going to make this huge move down? No, I would view that as a temporary move. So a way you can do this is kind of like a non-conventional way of thinking about this is not trying to jump on when they cause the cascade effect. It's when it stops, time to buy, right? Because you know this isn't real selling. It's options dealers getting the hell out of their positions. Well, that's not big money taking positions. That's just them basically puking up. They're hedging themselves. That tells me that's way more likely. You see what I'm saying? So it's just a different way of thinking about it. So anyway, you can set this for any stock. I got them for obviously the ETFs and then the SPX options, right? You can say, look at that. So they're still hitting the options. This market will probably fall down for now. But if you go, again, I show you guys every week, go to my website, you get discounts, all that stuff. But on my website, if you want to try out the Hero, and you can see that short date stuff, use this code. So normally you get a 1 week for free. If you use this code, you get 2 weeks for free. So go check it out. I'm telling you, it's going to be, I even put on Twitter yesterday, he posted it, and I said, this is a game changer, right? And what you also want to do if you go to Twitter, right, this was his quote, or his, where is it at here? So watch this video. He talks about it, right? And I literally just said, this is a game changer. And it is. It's just more information, guys. It's real-time volume information. And if you can use this stuff with the volume events, you have an edge like no other. Put it that way. All right, what's going on in here? And then we'll go check out Crude, maybe put on a trade. And I do like this. This is, again, we talk about this all the time. What is that? That's liquidity. Does that mean, I want to be short, man? They want to sell a bunch up here. No, it means they want to get filled. The longer it sits in here, they want to get filled, and they will get filled. It doesn't mean it's going up here right this second, but when you're positioning or you're thinking about which way to trade, you want to take into consideration where the liquidity is, right? Here's another example here quickly. Which way do you think beans are headed? I don't know. I'll give you one guess, right? This is not, I want to buy because look at all these buyers. It's these guys want to get filled. They've been in here all night long into the morning. This market is going to fill these orders. It doesn't mean, again, it could do this, screw around. They can get better prices, and then it comes down in here. They short up here and then get filled. But what I'm saying is when you're coming up with your thesis for the day, based on the bigger long-term picture, you better be factoring that in because there's a extremely high likelihood every one of these bands will get filled today. That's important information to know. It's the information to know. Volume. I don't know if I ever mentioned that. All right, so let's go over here. So the problem is, it's not really a problem, but this volume is kind of spread out in Crude. They're doing, it's the roll the last couple days. So let's just see what it is right now. So figure, and that's how you guys, I don't know how to do this, but probably some people that don't. Go to the contract. Go to quotes. So you can see here 168,000 contracts in Jan, and there's only 50,000 in Ds, right? So this is the product side you want to be trading. I mean, you may get some setups in, and there may have been some setups right there. In this is the Ds contract. Let's see. But you probably want to be looking at Jan. Actually, some trading firms, this was all in, this is a lot. So I got to decide on a trader. Some trading firms will literally, they won't even let you trade this product right now. That they move to the higher volume product for Crude. They do it in Crude all the time. I know AMP does that all the time. But let's just draw this zone because it wasn't in this market. And this is a ton of sell ice. You get 200, 300, 200. You got almost 700 sell ice in here. And you can see there's your line with the sell ice. It's basically one entity as well. And you could be saying to yourself, well, they're probably rolling into the next month. They probably are. Doesn't matter. There's someone else on the other side of this trade, right? That's the key. You guys are never going to know unless you are associate of God. You're never going to know what other, or you're sitting next to the guy that's doing this. You're never going to know why they're doing what they're doing. The only thing you can know is that they're doing it, and you need to know there's someone on the other side of the trade. So I don't care why they're selling here. I don't care if they're hedging options, if they're getting out of longs. I don't care. I know there's two sides of the trade. I know the market reacts to volume events, and that's all I need to know. If you spend your time trying to know the whys, I can't tell you how many traders that I've dealt with that just can't accept the simplicity of this. Well, why? What if this? And what if we do a moving average of the moving average of the ATR moving average? It's just like, why? Keep it simple. Stop confusing yourself. The more intricate you make it, the worse you're gonna do. I don't need to know the whys. Right? It's the what is right here. So this basically started all the way up here. You can see the line came all the way down to here. If I'm incorporating all of this ice. I almost caught myself going on a major rant right there. A lot talking today. So let's mark this up. I think that's right, but we can always edit it. You're better off just putting the lines in and editing it than going back and forth with this thing. Again, they're in the process of fixing this drawing tool or improving it, but right now this is a very wide zone too. This is not real tradable. I mean, it is, but it's like an 80, 90 tick zone. And what you could do too is what I do all the time, what I should be doing for this, is just drawing it to the most recent volume event, right? So that was not, but this was threshold. Let's do that. So we know this is the biggest area, right? Did I do that right? I don't think I did that right. No, I didn't. Yeah, I did. I came down to there, right? That was part of the spike, or was it? No. That spike came in when there was no ice coming in, so it was actually more up here. So I'm going to move this up here. I'm going to draw one for the most recent, and we can potentially trade off of that, even though I'm not thrilled about trading these right now. So that's your major zone. So you can bet the move out of here is going to be a big move, right? Because there's 1,000 loaded up traders on the other side of this trade. So it doesn't mean ice is always right. This is
Iceberg ZB 501 pound per
It's going to be a big move out here. So let's go to the most recent setup, and we'll potentially trade it. And that would be right here. No, not that. This is 180. So yes, this looks like the same house, but I'm going to, this is a concentrated area. That's threshold, so I'm going to draw my zone to that. Use your cursor. Figure out the prices where this spike started. Right there. And I think it was right there. Let's change the colors so it's not confusing. That's correct. All right, so now that's a much more realistic zone to trade off of. 80, and the bottom of the zone is 67. All right, so that's the first step. I should already know exactly where we're at. I just didn't get a chance to look at Crude today. So are we at an important area, first and foremost, important zone? Well, this is a bigger zone. There's a lot of stuff that happened in here, but I'm trying to see structure-wise what we got.
US sell $45 billion in 6-month bills on November 21st, except on November 25th.
So you gap up here,
$54 billion
directional convection here, directional convection here. That's that smaller zone there. We ripped through that. So, I mean, this is basically last stand as far as I'm concerned. This zone's drawn from all this other stuff, but this, could bounce here, and it looks like this is just turning into a bigger balance as well, right? And what are balances? They're just traders taking positions. When it finally breaks out of here, longer term traders, someone's wrong, real wrong, they're going to be puking them out either way, right? So this is basically the bottom of this balance. So this could, remember we talked about the 4 important areas of charting, this could be a very nice bounce area. So that's step 1, or step 2. Step 1 was drawing the zone. Let's look at our lugs, and let's look at our market profile. We were at blue lug, but we just drew new lugs. It's still an important area. Directional yellow and prior blue are important areas. It's not where I just jump in aggressively. I do jump in aggressively if I get a setup at the lug and it bounces away from there. But you can see, so we got this. And then we're not quite down here. That's more at 82. That would be baby lug. So, I'll still take this trade. I was just looking to see, remember we talked about whether you want to be aggressive or not. So I'm not going to be aggressive in this buy. This is an interesting too. We talk about cumulative volume. You can get that on Bookmap as well. I look at it in this, again, I can't have too many things on my chart, right? So when I bring up the chart, like when you bring up a new chart, this is what it looks like. Like I can't do that, right? I just can't do it. So I take off the CVD there and I look at it. I just use Stops and Icebergs for my sub chart, and then I look at it, the CVD on Sierra. But you can see here, what do you see going on? This is actually a very good example for all you people that use CVD and think it's the end all be all. It's very important, but there's a reason that this is happening. Right? When you look at this, all this is showing you who the aggressor is. So somebody is buying this aggressively as this drops down. That's important information to know, especially when you come into important areas. The sellers are not winning, meaning it's the buyers are winning. They're still sellers because there's got to be someone on the other side of the trade, but the sellers are being passive. Well, they're being aggressive, but it's got to be aggressive to drop, but who's being more aggressive? The buyer. So as sellers are selling, buyers are buying. One, it's not really responding yet, right? But this is interesting to know. But why is that happening? So buyers are being aggressive here, but we're moving down, or it's not really doing anything. Why? So it's good to know the buyers are being aggressive, but that's not the end of the story. Well, what's happening there, Bruce?
What, on the CVD?
CVD. So it's going up, but why?
Well,
and they're buying, but what are these buyers running into right here? You see anything that they may be running into?
Yeah, there's the passive side of the trade. They're running into the icebergs there.
Right. See, there's a difference. So yes, there's always a passive side of the trade when they're buying, someone's selling. But now you obviously have that aspect. But then this is one entity selling, iceberg selling too. So these buyers are being really aggressive right here. They're running into mouthfuls of sell ice. That's important information to know, right? So this is what I'm saying. Like if you just glance at this chart, which I guarantee a ton of traders are doing right now, they're like, oh my God, the CVD they're buying it. I want to get long. Oh, great. Yeah, they're buying it, but what are they running into? They're running into incessant sell ice as of right now. So I don't just jump up and buy this because the CVD is positive. I wait to see that they can win. Right now, they're not winning anything. They're buying it like crazy. But guess what? There's someone here selling, and they're probably going to sell more. So that just tells me, okay, fine. Let's see. I'm going to wait once this breaks out of here. This is just the last part of this. Remember, it went all the way up to here. But I want to judge, and then this is where my personal system comes into play, right? I need to see a move of an ATR out of here to prove that whoever's right, whoever's wrong. So if this can move an AT out of here, well, maybe those aggressive buyers are going to be right and this selling ice is wrong. But guess what? If this moves below here, what do you think you're going to start seeing? Stop run, stop run, stop run, stop run for all the guys that bought the 1,000 here. See what I'm saying? This is why this is key. And this, once again, some days you'll see CVD going up like it is, and you won't see any ice, and that's a different type of situation. You're like, okay, well, I would bet that the buyers, the aggressive buyers, would end up winning more often. In this situation, the aggressive buyers are running into icebergs, and who knows how many they have in their arsenal. See what I'm saying? So again, I don't jump in the trade either way here. I wait like a sniper. We talk about it every week. I wait to see which way this breaks, and then it's going to give me a very good indication of the big move, right? So that's a very good example of not just using this CVD blindly, right? So you want to, again, when I first learned this CVD, I thought it was God's gift to traders, right? I'm like, oh my God, this is awesome. Like you'd see the market do this, the CVD would go like this, and it would make a lower low, and the CVD would be still moving up, and then the market would do that. I'm like, this is incredible. I'm telling you, you will get killed just by blindly buying. Like right now, the CVDs, they're buying, I want to get long. And important areas, yeah, it's a lot more meaningful. But you also need to know, hey, yeah, they're buying. Is there an iceberg here? Okay, I want to be very careful until I can clear this iceberg area. Then I'll go long. See the difference? So that's very, very important.
Yeah, that's a really good point, Scott. I mean, another one too is just I think people are looking at the overall reading of the CVD, and it's like, oh, well, there's divergence. Obviously, it's divergent.
Right.
If you look into the details of the volume that traded there, you'll see why it's divergent, and you'll see that those buyers that bought are upside down on this move down right now. Hey, maybe they'll
Right.
win.
And the
Maybe
ones that go
they'll win.
lower, it's going to get even more brutal.
Yeah, exactly. I mean, maybe they'll win overall. Like maybe. I mean, we don't know yet, but like for right now, they're on the ropes here.
Exactly. That's what I'm saying. That's how I use my areas and the way I trade those zones to prove it needs to get out of there, at least in ATR. Then I know who's basically winning or losing. Right now, you don't really know, right? Because it's just stuck in the middle there. So this was in January crude, and this is large too. This was a huge stop run, so we can trade this as well. It's 400 plus stops, sell stops. That chart I showed you was the D's chart, the D slugs. She hasn't rolled the lugs yet. I don't know why. I don't know if she's on vacation, but she usually is on top of that. So I'm sure they'll be rolling tonight. Anyway, so this zone right here. You can see the sweeps, right? So they started up here, but then they triggered a stop run. So whoever was sweeping these triggered the stop run. And then you can see the red line there. And that's why this on chart is so incredible to have. Actually, I have that way too high.
Yeah,
So I want
Scott.
to draw.
Just a note on that about the stop run part. I mean, we. I mean, we'd have to really kind of zoom in and see the details in there, like when, if that was one singular event or not, and then everyone that was within that area. See the big sweep from the 8260 on down.
Okay. Okay.
If that's one
This is
event,
what triggered the stops triggered here, though, right? Where the red line started.
well, they could have been triggered along the way, all the way up at 8260.
Well, I've been
See, because it depends. If you show the best bid and offer, we can check it
right.
out.
Well, it's also not showing any stop runs down here either, though.
It
It's
should
not.
after it updates though. I mean, yeah.
It did
So
down here, yeah.
no. It won't update until afterwards. Yeah. See the stops update in the subchart afterwards at the bottom. Yeah.
But this
What?
is even after the red line. So the red line started here, and then it updated.
Yeah.
This is how
Show.
I draw my zone.
Go up to show the best bid and offer. It's just a detail, but I mean, just to understand like how these markets work, and not you. I'm not. I know you know all of that. It's just for others to understand. Yeah, this is one singular event. Now zoom out now. So we don't know. No. Zoom out. Yeah.
Really?
Okay. So yeah. So what happened was someone came in with a massive order and hit market sell, or was liquidated. Likely they were liquidated. Um, and along the way there are stops in there, but there's actually an order even in by the aggressors. So that one first large transaction unfolds, and as it is selling, it is triggering stops along the way, but they are not filled until after that large transaction finishes. Then the stops start to trigger.
Because the transaction gets first right.
Exactly.
So, right?
Exactly. So we don't know
Well, even
where the
if you're
stops
saying
were, but
everyone knows this. This is what slip. This is called slippage, guys. So
exactly.
it's like if you have your order, and this is why people bitch all the time, right? You're like sitting there, you're like, what the hell, man? I got filled 10 ticks lower. Well, because this trader, whoever swiped the book, he's got first right to all these prices, right? And then once he's done, then the stops trigger.
That's right.
So you could incorporate all this. I want this doesn't happen all the time where you see this huge swipe and then that. Like usually, it's all in one area as far as it's contained. But you could draw your zone up to here if you want, right? Because he had first right, so you don't really know where these stops were. So technically, they could have been anywhere in here. So I guess you really do want to draw it from the start. Maybe I'll just start doing that because you don't see this situation that often. But the point is, You don't know where these, they started triggering here, but they could have been up here. They just didn't get the chance to fire off because they don't have that right. This guy has the right till he's done because he swept the order book. You see what I'm
Yeah,
saying?
in fact, like we know that some of them were triggered along the way, but we don't. There could have been lots that were also triggered way down at like 82.44 or something. We just know that there was enough of a big move there, or looks to me like it's probably a liquidation that triggers stops all along the way, but they get filled after that first guy gets filled.
Right. So that makes, that actually makes more common sense where you want to, even though the red line, I've been doing it on the red line, and again, you don't get the situation all the time.
Yeah.
Better off just going where that huge swipe started. And this is the great thing about, this is the sweeps indicator, right? This is part of Global Plus. Another awesome thing, that's this, right? And I got black and white for those. Aggressive buyers, aggressive sellers. So this is obviously aggressive seller. And then this seller triggered all these stops. So these stops could have been anywhere in here, but they finally got their chance to fire off when this guy was done. And then it pushed in another 10 ticks. So when you get slipped, this is why. When you're like, what the hell, man? I had my stop, but you're calling your broker. I had my stop 60 ticks higher. What happened? Most because someone came in and swiped at 60 tick, not in this instance, but swiped at 60 ticks. You don't have the right to sell until they're done. Right? That's because your order was at a different price. See what I'm saying? Is that the right way to explain that, Bruce?
I'm sorry, I lost you at the end there. What you said that? I mean, first the guy transacts. When his transaction is finished, then whatever was triggered along the way fills.
Right.
Yeah, that's the chain of events.
That's what I was saying.
Yeah.
All right. So, good learning opportunities today on this stuff. We could go over if you want. If nothing's going on, we could. I do have the heat map brought in here, or this new indicator here, the Trade Map Pro. I don't know if you want to get into that today, but I didn't even bring it up, so we can maybe do it by scratch just for one of the things.
Sure. I was going to mention it earlier, like because you're looking at the stops and icebergs, and you mentioned this was only with rhythmic data, and it's an add-on package from the Bookmap marketplace. And the reason that we put it in there is because it is very specific. It is only for futures, CME group futures, and you need to have rhythmic data. So it would be kind of unfair to charge everybody for it. It is charged separately in the Bookmap marketplace, and works with Global or Global Plus. Now, what we're just releasing today is the Trader Map Pro, where you can, it's based on MBO data as well. It is included now in the MBO bundle. Except that for a limited time right now, anyone with Global Plus will also have access to it. Just note that you need to have rhythmic data, and it's only for CME group instruments.
Guys, that's the same thing for the SI indicator. You need the CME and rhythmic. They're the only data provider that has the CME MBO data, so you need that to be getting this stuff anyway.
Yeah, that's right.
It's not like you have to get something different. It's the same stuff that if you're using the SI indicator. What I was gonna say.
Yeah, I mean, I could demo it if you want to take a look at it, Scott. Or I'm probably going to hold. We'll probably hold an event tomorrow afternoon, and then cover this in detail. This Trader Map Pro. It needs the time. It's pretty awesome though, to see this and how it works. So you can filter the heat map based on the MBO data and look exclusively only at specific traders trading certain size.
All right, so I got stopped out of that. I'm sure it's to the tick as usual. It's a little bit below. So decent trade. I stopped out based on this new volume event. So what I will not do now though is this is disqualified as a short opportunity because remember I was talking about this is why I was going to go long, but did you see how I avoided adding to this position? What did I need to see? I said I wasn't really gung-ho about the area, meaning I want to get in aggressively. I was going to wait for ATR retest fail. You got your ATR, you got your retest. Did it fail? Fill me? My order would have been on, I think I put my order, but it was up here. No, and then it got through the zone. So the point is, I would not short this volume event, whatever that was. It was over here, because it was able to push a full ATR. So in my mind, from watching so many of these, I know if the market is able to push a full ATR outside of the volume event, I don't want any part of the other side. I just want to wait for a new setup, right? So meaning I wouldn't go short off of this no matter what happens. Even if it did this, or aggressively or whatever, I'm not taking shorts off of this because it showed strength to get an ATR away from there. So I don't want to be shorting this, right? I want to short volume events that can't get an ATR above and then die. That's what I'm looking for. So I caught that long, stopped out of that last part, so now I'm basically just waiting for a new setup in there. So this is exactly what I was just talking about with the volume. Like, how are the buyers doing? Pretty good. You want to jump in and buy just because the buyers are being aggressive there? They're losing, right? Just because they're buying doesn't mean that they're winning, right? Especially if you can't get in there. And then, like I said, you know that there's a bunch of sell-outs here, and guess what? You're going to start seeing some pukes here too, right? Meaning stop guns, probably any second, because the guys that were just all aggressive that ran into a mouthful of sell-eyes are like, oh crap, oh no, okay, I'm out. And you're going to start seeing the swipes and so on and so forth. You think that's important information to know when you're trading? It's the information to know when you're trading. That's all I keep telling you guys. Like, just use this stuff with what already works. If you have something that worked, you have a strategy, start to implement this stuff and you will be 100 times better and more confident because you know what's going on. Right? That's the key. You're not sitting here. What bothers me most when I'm trading poorly, or if I take a loss, if I don't know why, right? At least most of the time, if you are taking losses, you know what happened, right? So say you just wanted to be aggressive there. You're like, you know what? I like this enough. I don't need to see him. I'm going to go long. Well, if it moves out of here, you're like, okay, well, I know I'm wrong because these guys, there was some big sell ice. I know why I'm wrong. I was willing to take that shot, but I know why I'm wrong. That is like a game changer if you can explain why things are happening most of the time. Other than that, it's like you might as well flip a coin, right? All right, so what did happen here is this got an ATR below here. So if we get a retest failure, I will short this market because now, one, I'm surprised we haven't seen any pukes yet, but this is the same thing I was talking about earlier. Imagine all the buyers in here. Anyone who's holding their breath, when this comes back up, they're like, okay, I'm out, uncle. And then they sell, and that leads to the next wave down. That is ATR retest failure. That's what it's all based off of. So now if we get a retest of this gray zone, whatever color this is, if I get retest failure, because I know that's an ATR below there, let's just put the zone in real quick just to get official prices. So if you guys end up trading it as well, 80 and 67 are your prices. 82.80, 82.67. ATR is 27.9. You can see in the middle of my screen there and on the right. So 0.279, that just means 28 ticks. That's the average range for 5 minutes. That's what I'm using to judge the current volatility as a day trader. If you're a bigger, longer term time frame trader, you can use the hourly ATR, right? That's 119 ticks. So if you go short here, say you go long, say I love this zone, I think it's going to hold, I know it's the bottom of this balance area, I want to take a longer position, and I'm going to risk two hourly ATRs below there. It shouldn't get 200 ticks. Well, now you're basing it off of something. You're not just randomly, this is a zone. You're making it get two ATRs out of here for a potential move all the way back to the other side. See what I'm saying? Or wherever you're looking. So you could use the hourly as well. But I'm a day trader, so I'm using the 5 minute. And I get, these emails, well, that's subjective. Why not 10 minutes? Why not 15? Well, because 5 is probably the sweet spot from it is from what I've watched. 1 minute's way too short. 30 minutes, an hour is too long. So 5 minutes is the sweet spot for the way I trade. So anyway, that retests that zone. Bottom of the zone is 67. I can then go short at 36. 82.36. I can put on 4 based on that risk. So I need to see. There's definitely an ATR below here. ATR was 27. This definitely got 27 ticks below here. This is 50 ticks, 60 ticks. So if we do this, I can go short at 82.36 right there. And then my stop is going to go 110% above the top of the zone. And you can see the stop price right on there instead of just guessing or figure it out in your head. You can just look, stop out at 83.11. That would be 110% of an ATR, 5-minute ATR. So we said 27, that's about 30 ticks above the top of that zone. Right? I'm waiting for that to retest, fail, and I'll take a short in that market. You can do the same thing here too. This was, if you want to trade Jan instead, which is probably suggested because again, a lot of firms won't even let you trade the D's product right now. This is the same thing, right? This was a volume event. This was a stop run. If this does this, you can go short. Put in the values for that. I could trade Jan as well. So I'll be watching both of those. And there has not been one signal in your guys' awesome ES. It sucks. Let's see. There. Nothing threshold anyway. Not for what I trade. This is an important area though. Like if I did get a bullish setup, I would take a long in here. Right? This is why I have these zones. You would be amazed at how the market reacts to these zones. And if you get the real-time volume, that is the edge. Right? So first of all, we gap down. So it's not like we're standing in front of a balance area that's already had the puke overnight. This is a huge area. Gap down, tail, gap down, or directional conviction down. Gaps are directional conviction as well. Gap down, directional conviction, selling tail, got through here, struggled, directional conviction, here we are. And it's basically, you can make this, one bigger looking thing, and you can, it's a very good odds this bounces off here. And then you add in your options, you're using spot gamma, he's calling for a rally, so you already know that. Or he's based on, again, he's not calling for it, he's based on the options activity. It favors that. So now you got an important zone. You're coming up with all your reasons why you want, your thesis of why you want to be long, right? Take a look at.
Hey Scott, I have a question for you. I mean, we're not getting too many questions in today, so I had a question for you. And actually, we only have about 5 more minutes. But looking at your trading strategy with the ATR, and I know it's 5 minutes, etc. But some of those are much bigger moves on your candlestick chart. And are you typically like kind of holding those for like several hours or even maybe a day or two, or to capture some of those moves?
Yeah, I mean, I'll hold, like the other day I was short. I was short ES actually the day of the Poland thing with the bombing, and it wasn't just because I thought we were going down. We had volume set up, and right at the end of the day, it was like right here. I think it was at 39.90 ish, and there was a volume set up, and we were into the close. I'm like, I'm going to hold this overnight.
Nice.
And I well, no, yeah, not nice. I got out because then Biden came out 2 hours later and said we don't think it was Russia, and then the market, it did do the spike. I wouldn't have stepped out, but I basically just scratched the trade. But yeah, I will hold it. So that's what I'm talking about. It's using I don't trade just off fundamental. I don't say, oh, well, I think we're going down because I've been thinking we're going back down the low since 2020. How would I have done, right? There's that saying that you always hear: the markets can stay irrational longer than you can stay solvent, right? So it doesn't matter what I think. I have opinions all the time. I wait for the volume events and then that gives me a better edge, right? That's why you come up with the thesis every day of what's going on. That's why I do that. I do it from my room every morning, what I think based on this. But this was a really important area, and we gapped down from here. This was a huge ice area. We've been talking about this too. This is just amazing. This is another thing you guys should be keeping track of. Like when you see a bunch of ice, like this was like 14,000 ice contracts all in like an hour. Back over here and look at how this market reacted to it for days. For days. Look at this. So this was the ice. It was right at the close. Right? It was like this little area. It was like 14,000 ice. Right? Overnight, held. This was still overnight. You see by the gray. Morning came down, tried to get through, just barely. You're not talking by much. Came through, bounced off, came back, bounced off. Came back, bounced off, led to the big up move, held again. Look at this. This is why you guys want to know that this stuff could stay relevant for days, especially if it's huge area. And this was a huge area, and you caught it again. And you could have caught it. These are not small moves. This is a 50-point move, right, off of this area. And then when it broke, what happened? Bye bye. Right. So this is the same concept as a balance area, right? But all balance areas are not created equal, right? So I don't like there's a lot of guys, a lot of educators, I'm doing air quotes out there that are like, it's time and price. Okay, I don't care how long a market sits in an area. Like if there's no volume in it, yeah, it's showing as a balance area, but is that as important as time with 14,000 buy-eyes? So not all balance areas are created equally. With this information that Bookmap gives you, you can say this balance area is way more important than a normal balance areas that I usually see. And you can see this is what I'm talking about. Came down, bounced, gapped up, bounced, bounced. Then guess what? Then built balance here. It was showing you was accepting this price now. And then when it finally got through this is that ice that I just drew, gone. Now I can promise you, not promise, but there's a very, very high percentage when it comes back here, it's going to react the first time, at least the first time, right? Because all these traders that were long are holding their breath. Anyone that was able to hold through this, if it comes back, they're like, get me out. You got this ice, you got all this stuff up here. You're very likely, this is an excellent shorting opportunity with a move back up in the air. Then the spot gamma levels are up here as well. I mean, that's a little higher. I mean, I think it'll stop at that zone, but we'll see. So this is how I trade, right? And I have these areas and I just wait. I come up with my thesis and I wait for the areas. But yeah, if I love a trade, so for instance, if this comes up here, it's right at the end of the day today, and I get a volume set up, I get short, I'll hold it. I'll hold it overnight. I'm not a good overnight trader because I never sleep. I wake up 20 times to check the thing, and then it just ruins me for the next day. But if I really like a trade, I will put on a longer term trade, absolutely. So then the other thing too, you want to know what this area, this is the same thing. I didn't draw it, I'm going to draw it because I'm going to go back and find the exact price, but I can tell you, I was sitting there in awe yesterday of the buy ice that was coming in on NASDAQ, and it was right in here. And guess what? They weren't so right, were they? And guess what? When that comes back in this area, you're very likely going to see a reaction. So mark this area right here, this balance area, into this zone. This is where we gap down from too. This whole area right here. I would be very, very, very surprised if this can just rip right through here. You're probably going to see some kind of reaction that could end up leading to zero, which I think we're going to. I say that every day. So, all right, just a quick look here at this new 0 date to expiration. See what's going on here. Again, you guys can get free trial over this just on his website. You can add an extra week. Go to use my code for it. So, I still don't really understand what the retail is. Like, is he just? I got to ask him. I'll send an email. Like, is he just coming up with smaller size options and instead of big blocks, saying that's retail? I don't know, but I do know this blue line is what you want to keep an eye on. So keep an eye on it both ways. Like if this starts ripping higher, well, the market's probably going to follow. And then also know that if the market does rip higher, well, that's probably not real buying. It's probably just these options dealer having to puke their positions out with futures, or not puke to hedge themselves, right? So that's what I'm saying. It's kind of a contrarian view of, yeah, once you want to catch the moves when you see the blue starting to lead the black is the price line of the current price. But once you get to an important area, you see something like that where you're like, well, that wasn't real buying. That was just options. They haven't hedged their positions. I'm ready to short this puppy now, right? So that would be even better if we move into that zone with something like that. So let's see. This is SPY. You can see this is hung up here, so that's a bullish divergence. There it is. There you go. How are those CBD buyers doing right now? They're doing pretty well? No, they're puking. That is why I say you've got to know the context of that CBD. You don't just start buying because the cumulative volume is spiking. You will get your head ripped off. Why did I lose my feed here? Hold on. Take one look. Because it's just really good. I can't tell you how many guys don't understand this thing and don't have the icebergs to understand what's going on, right? How are they doing? How are these buyers doing that we're buying this whole way down? Right? Not very good. Right here. Let's just keep buying. Let's just keep buying. Let's keep buying. Oh, wait. Now we got to puke them. Very important to know when the CVD is just buying from passive orders in the order book, or are they buying passive orders from icebergs? That's a big difference. There's your first puke. So I'm not even going to get a retest. And now what I would do anyway is I would draw a new zone based on this, and I'm going to trade off of that. I don't really want to go long based on what I saw up here, so I'm hoping to go short. But you're probably going to, if this moves in a little lower, you're going to see more pukes. Probably to the tune of 1,000 or 2,000. Actually, that was like 2,000 buyers, wasn't it? The iceberg was 1,000 in itself, but this went from zero to about 2,000, close to about 1,500 buyers. Yeah, they're not feeling good right now. Because that's the information. That is the key to trading, is understanding that and then knowing your areas and then taking advantage of them and then having a set process for where you stop out when you're wrong, because you're going to be wrong. It's just a percentage game. And where you get out when you're right and be consistent, and you will make money. Again, I go over this stuff every day in my trade room, twice a day. Most days. Lately, I've been doing a PM webinar because the trade has been horrendous. But all right, Bruce, that's all I got. I'm shocked there hasn't been any questions all day because we covered a lot of stuff today.
Yeah, there's been some chatter in here, but I want to try to get in the habit of finishing at 11:30 East Coast time here, myself included, because we've got Tom B right up next. He's already streaming, so if you guys are interested, you can jump over there as well. We've got streamers basically, throughout the day. We've just our Discord channel.
Streamers or streakers? Did you say streakers?
Streamers.
Oh, I meant streakers, like naked guys. Just kidding.
Yeah, no, we don't have any naked guys. No, we just built out quite a bit in our community. No, it sounds great, Scott. I mean, this is a great lesson on understanding the, reading the stops and icebergs in here. That CVD thing was just great.
And you guys saw firsthand, right? How many guys got crushed looking at that divergence and buying it, and now they're puking them all out. So pay attention if it's icebergs are the reason that the CVD is going the other way, because they're buying right into, the sell ice was absorbing that buying. And then just keep in mind going forward today, remember what Spot Gamma said. So if you start seeing some setups, we're in the zone, and the zone looks like it's holding. This could make a move all the way back today. That's what Spot Gamma actually called for. And again, when he talks that way, he doesn't do it very often. You want to pay attention. And if I do go long, I'm 100% being out in that zone, and then I'm looking to go short. So that's my trick. That's what I'm waiting for. Same with NASDAQ as well. Huge size in here yesterday. If we get back up into here, so I'm favoring a move back up in here today, especially with, again, we talk about Confluence, all the stuff we've been looking at chart-wise, and then Spot Gamma. If you have this 0 date, you can get this right away. Go do the trial, and you can watch this as well. Right? Get it right now and watch and see how it reacts today. This thing is going to be ridiculous. I mean, I can't wait to see some of the edge with this combined with the volume setups. I'm like a kid on Christmas Eve. All right, Bruce, that's all I got.
All right, excellent. Thank you so much, Scott. Have a good weekend, and we'll catch up with you on next Thursday.
Next Thursday's Thanksgiving, right?
No webinar. I'm sorry.
You could do it during turkey dinner if you want. You can do that during football.
That would be horrible.
You guys can listen to me eat. All right, I'll see you guys in 2 weeks then.
Okay, thanks, Scott.
Thanks.